Good afternoon. This is Adil Rizvi. Welcome you all in our weekly Lunch and Learn session. I have a very special guest today, and I'm sure you will be getting a lot of value out of today's session as well. Before I go on to introduce our guest today, if you are watching this live, please share your feedback. If you have any questions, our guest is kind enough to take questions as well. They have confirmed that to me, and they will be taking questions or whatever we can answer in the given time frame. So please share your feedback, your questions, whatever your thoughts are during the session, or even if you're watching this recording later on, make sure you share your feedback. Today's topic is about the best kept secret in Australian property dynamics. And I don't want to delve further into it. I will go on to my guest shortly. Very quickly about myself. So I am Adil Rizvi and I am a property strategist. I love property and I love strategizing and leveraging property for creating wealth. That is all about myself for today. I would like to introduce my very good friend, a very esteemed guest for today, Mr. Shan Zedi. Hi, Shan. How are you doing?
Hello. How are you, mate?
I'm doing very well. How have you been, Shan?
Firstly, thank you for having me on this. And it was a bit of a surprise when I got a call a couple of weeks ago. Would you like to do this? And I was like, hell yeah, because it comes from passion, just like your passion. So yeah, again, thank you for having me. And I'm doing really well today. Thank you.
Beautiful, beautiful. It's a pleasure having you, Shan. And just for our audience, very quickly, before we start delving into today's topic and asking Shan, I would like to quickly introduce him. So, Shan started off as a technologist. So, he was more in the IT space and he was leading big teams across Oracle and Microsoft. And from there, he always had that love for property and property investing and property development. So, he delved into the property space and he has been the owner of multiple property related businesses, and he has different, I have been to his office multiple times. It's a beautiful space. He's based in Northwest Sydney, and now today we are talking about one specific business of Shan. So before I go into your business today and today's topic, Shan, what is it about property that actually kept dragging you towards it?
I think as a kid, I just loved looking at like, you know, buildings, in particular, different types of churches, mosques. We didn't have a lot of synagogues where I was growing up, but I love how that comes across Manders. So it was anything that was unusual. I just used to love it, and that kind of led, and growing up overseas, I was born in Kuwait, and they spent a lot of time, effort in building quite unique homes and different style buildings, very much like Dubai, I guess.
Yep.
So it stems from there, and coming as a 18-year-old to Australia, I don't know, I just had a passion for property. So I don't know where it actually happened, but I think when you start something and you have a little success, you want to try it a little bit more. So
Yep.
from owning an apartment and getting a little bit of equity, so I could take it out and buy the next one, and quickly realizing that apartment is not where I want to be. I want to buy land. That's
Yep.
kind of where the journey started, and I basically I like following a best practice. So I just kept on buying land and building a individual home or a duplex, or a smaller townhouse project or whatever. So that's where it came from, and I was traveling a lot for my role in senior leadership team, and the tech companies that you mentioned. And I just thought, this is a really cool way to get some extra income, or my side gig was
The
always
side
property.
gig, yeah, that's what I was about to say. And that side hustle soon became your full-time passion now. So you started with subdividing properties, building properties, renovating them as a side gig. Then you started doing property developments as well, like subdivisions, and a bit more serious about doing subdivisions for townhouses in Sydney and stuff, right? And then you
Yeah.
started looking into property funds. So you have that backing, you have that experience in the property space for the last 15 years or more. What brings you to property funds? That's what we want to talk about. And why do you say that it's the best kept secret?
Well, it is. I mean, how many people do you know that have invested in a property fund. Um,
Very
uh,
true. Not many.
yeah, so it is a kept secret, and you hear people investing in crypto a lot more often than you hear of people investing in property funds. So yeah, I
Just
mean,
want to give one advice over here for anyone watching this. I know you mentioned another asset class, so by no form of means this is a financial advice in any way that we will be sharing during this webinar today. Any information is very much generic, and before you act on any of the information, make sure you seek your independent professional advice.
yeah,
Sorry,
yeah.
Kiran, for cutting you in between,
No,
but I
no,
had to.
100%. All these disclaimers are very important, and again, there's no advice here. This is a chat between two people, really.
And more about sharing your personal experiences and
Yeah,
journey.
yeah, 100%. Like, for me, the journey was very simple, mate. 20 odd years in technology. At COVID, just before COVID, I was like scratching my head because I was traveling like 200 days a year, and growing family, and I was like, I need to do something here. I used to buy a lot of lots, or option a lot of lots, and I think I just realized that I don't need to work as hard anymore, and I can just I can survive with the equity that I've generated, and I was very fortunate to start investing in property funds. And to be honest, my journey in property funds was always there, because I love building homes, and I like doing property projects. But I think a big part of me also realized that part of the success I've had, a little success I've had, is all based on my appetite to invest in property funds. I started investing in property funds in 2012, and it's a time box thing. You put money on one end, you get money out on the other end, and you just keep going, right? And I remember I started with a small humble $165,000, and I got my return, and my confidence grew, and I kissed my muscles on both sides and said, let's go again. And that was what I kept on doing, and that's what I when I was working with developers, and learned a fair bit about that. And I was like, well, why don't we bring something pretty cool to market? So I started planning this a little while ago. It's taken a while to get it right, I think, and I think we've got it right now.
Oh, beautiful. That's great. And I'm just coming because I'll meet a lot of people, and I just want to give more value to the people who are considering buying properties, because that's what I help people do. And a lot of people are struggling with having their deposits in place, having the right amount of 20% deposit, and coming up with the right deposit to have buy their dream property, as per se. We all have that dream property
Yeah, yeah.
in our mind, at the back of our mind,
Mhm.
with the great Australian dream. So I was actually talking to someone, and I would share that example from a couple of weeks ago. And I had not, we had not planned this webinar until then. And they said to me that they have $200,000 sitting in their savings account, and they have to reach $300,000, because that is what will be their 20% deposit for the house they're looking for. And both husband and wife were working really hard trying to save money, and they had that $200,000 sitting in a savings account. So they were earning 6% on that every year. I think when you talk about property funds, and I can see some numbers in your background, it
Yeah, you
looks
can
like
see that. Yeah.
what you guys are offering, like 16.8%. I know you haven't touched on that as yet, but I'm just getting excited thinking of that example. That for someone who's getting 6% return on their savings, trying to generate a deposit for their family home, probably they should be considering something like a property fund instead of just parking their money in a savings account. They can make probably three times more in through the property funds. Isn't that true?
They can save three times more, definitely. Yes. But depending on the right kind of investment, and you know, so again, we're not giving any advice here to anybody, but hell yeah, I mean, if they've got 200,000 and they want to get to 300,000 very quickly, this could definitely help. They could do a termed investment in a fund that is returning, anywhere from, I don't know, 12 to 15% or 20% or whatever. They need to shop around,
Yep.
and this is an avenue that they need to look at. One of the things that I do want to talk about is, this is definitely a very much a savings plan. Our fund, as an example, what we do is we pay 8% uh, monthly, so that's a passive income for someone that's retired and really needs it. Or it could be a savings plan for someone that is very aggressive about savings. So, it really depends on individuals. But what we do is we pay essentially a savings for them at the end of it. So we divvy it up between 8% and where they're going to land at the end of it. So that's something that how we break it down. Some people or some organizations pay right at the end of the term.
Yep.
And so it really depends on where they're investing and what they're doing.
No,
But
that's
yeah,
really important.
they
Yep.
should be considering an asset-backed fund where they can invest and someone that's reputable.
And if someone, Sean, if someone is uh, considering to put their hard-earned money, like $200,000, just continuing with that example, into a property fund like yours, what are I think you talked about being asset backed, but I just want to digress it a little bit more.
Oh,
So, what are the guarantees? What is the safety net around their money that they will not lose it and they will definitely get the returns?
yeah, very important. So my tips are, firstly, don't invest with builders because the price of building keeps creeping up, and the margins are very low, and it's I would definitely consider that as high risk. The where I mean, this is my own, I guess, theosophy, and we all follow it. My co-founder Zain Qureshi, myself, we put a lot of effort in coming up with following residential land development. So the investor actually owns the land, and we do preferred equity type investments, where
Wow.
the investor actually becomes a unit shareholder in the holding in the development, and they're secure because they own it. So
Hmm.
um, I think that is the right kind of investment, and that's what I did as well over the course of 15 odd years.
Yep. So in your case, the backing comes from the developer, not the builders, right?
That's right. A hundred.
Okay.
Yeah, so it's backed by the developer, obviously the right size developer that has the treasury and has the appetite to uh, pay you back, and that's what an investment manager does. Assess the developer, understand how they operate. They need to, I guess, fit our risk profile. There's a lot of
Yeah.
emphasis, particularly in our organization. We've got a very solid risk committee. We've got an advisory board for all our governance, and we're very compliance heavy. So you need to have all those things in place with the developer that can provide you all those things before you can actually agree to take a fund forward.
Beautiful. Just for the audience, actually, I'm looking at the comments on my phone and just trying to respond back to the comments for people who are commenting live on this webinar. So I'm not ignoring you. I'm just looking on my phone. For
No,
some reason, it doesn't show on my
no,
laptop. So just letting you know. So now we know that people who are considering to have their savings done aggressively properly, they should be considering property funds. The ones that you guys offer, of course, is backed by developers, which gives it the right protection. What about the time frames? I mean, do we need to have minimum, like, do we need minimum 5 years to invest with you guys to enjoy that 16.8% return, or can we do it for a shorter period as well?
yeah, no, definitely. So within our, I guess, internal matrix that we've set up, none of the investments are above 3 years, and we don't intend to change that ever. And a minimum term is 12 months, and the maximum term is 3 years. The longer the term, I guess your return could vary in that scenario by a little bit. The yes, so there's definitely 12 months terms out there. Do a lot of your homework. If you're specifically asking me about my funds, um, for our current fund that we've got available, the term is 26 months. We've got 24 months to go. We're about to close that one and launch the next one, which is going to be around the 20-month mark. So every fund comes with its own, I guess, term. Um, we also look at doing private equity as well, and those terms can be set at 12 months. But the minimum bar is 12 months. Look, if you're looking at aggressively saving and you as a investor are thinking about an aggressive saving plan, um, 12 months is the term that you should be considering to really beef up those savings.
Beautiful. And 12 months goes away very quickly. So I don't think that is a long enough commitment. But I think the more important thing for a lot of people is to make sure that their money is not getting in dodgy hands. And I know that some of the developers that you guys work with who actually back your projects are really very renowned developers. So if for people who are watching this webinar, if you drive around in Sydney, especially in northwest of Sydney, you will see the name of the developer very often. So
Yeah.
I don't think there are any issues in terms of that side of things, but definitely, what would be your tips, Shan? I know you've given us a really good insight about property funds and how people can really create wealth using property funds and then use those funds to either buy their dream home or put that money in their business or whatever. It's like a very aggressive savings plan. That's how I look at it. What are your tips for the people who are looking to consider property funds? What they should be looking at?
How much time have we got for that tip? Because it depends on that. But
Floor is yours.
if I've got a couple of minutes,
Yep.
based on my experience, I think looking at asset classes, you got commercial, industrial, um, health, hospitality,
And we
retail.
will stay within property because that is our domain. So
So,
we are talking
so,
about
so
asset classes within
these
property,
are these are asset classes within the
within
property.
property
So,
space. Yes.
hotels are hospitality. It's a
Yep.
hos- it's a hospitality asset class, etc., etc. I personally think residential land development is a tip that you should think about residential land development because your entry and exit point is very very much defined. Look at a development that's very close to a DA. Look at our very high growth area. Look at the last 3 4 years of that land. How it's done. It's all about location in real estate, as you would know, Adil, and for everyone else. But where is the land located? Are all the services available in the land that you're thinking of investing in? And in also, you talked about the reputation of the developer. That's the most important. Look at
Yep.
if it's a developer that's doing their first or third or fifth project, I would steer away from them. If they've done 20 plus projects, is when that you have the confidence that they're the right kind of people. I would also
Exactly.
say that talk to a couple of their investors, what their journey has been like, and if they're not willing to share it, well, there's something wrong with that. So yeah, those are my tips.
No, beautiful. Thanks very much. And we have a comment from Mesam as well. Thank you, Mesam, for jumping in and providing your feedback. So before we wrap it up, Shan, just wanted to quickly understand if someone wants to reach you directly and wants to understand more about your property funds, what's the best way of doing that?
Well, we call five pearls, and we follow five particular sigmas that we follow every day. So remember the name Five Pearls. It's fivepearls.com.au if you want to check out our website, and our phone number or you can reach us on is 1300 791 019. So 1300 791 019. And yeah, would love to hear from you. One of our investment managers or customer service team would love to talk to you and hopefully introduce you to our world.
Beautiful, beautiful. Now, thank you very much for being kind, Shan, and sharing all
Yeah.
those beautiful tips. And what we will do is we will share these contact details in the comments as well after this webinar finishes, guys. So if you have been watching it live, if you have any questions, feel free to post them in the comments. Even if you're watching a recording later on, please share your feedback, share your questions for Shan. He's more than happy to take them. And if you have any feedback, please share that with us as well so that we can keep improving on these webinars as well. And if you want to connect with Shan, we will have the contact details posted into the comment section shortly. Thank you very much, Shan, for your time.
No,
It
thank
was
you.
wonderful
Thank
chatting
you,
with you.
Adil. It's been great.
And we would love to have you again very soon because we only touched the tip of the iceberg for now.
Yeah,
but
sure.
that's what we can do. So let's probably plan another session where we can go more specific on a particular property fund and talk more
Great.
about it.
At your service anytime, and looking forward to the next one already.
Beautiful. Thanks very much, Shan. Thanks for your time.
Thanking you.
Take care. Bye.
Bye. Ciao, ciao.